Good evening. In the end, it was a fairly subdued F&O expiry session for the Indian markets. The good thing is that the key stock indices managed to claw their way back towards the end of the day to close near the day's peak. They still closed with marginal losses. There was some intraday volatility but not a great deal, with the Bank Nifty witnessing short rollovers. After a gap down opening, the Indian equity benchmarks turned choppy and remained in the narrow range for the first half. However, the bulls turned their tide in late afternoon trade, with the main indices almost erasing all of the losses thanks to the selective buying in pharma and auto stocks. The BSE Sensex was down by 63 points to close at 17,058, and the NSE Nifty was down by 16 points to close at 5,179. The India VIX on the NSE ended lower by 2.2% to close at 24.33. Among the BSE sectoral indices, the Capital Good Index was the top loser, down by 1.6%, followed by the IT Index down by 1.1%. The Tech Index was down by 1% and the FMCG Index lost 0.7%. The Pharma and Capital Good indices were the biggest gainers, followed by Auto, Metals and Realty indices. The BSE Mid-Cap Index gained 0.2%, while the BSE Small Cap Index ended higher by 0.7%. Out of the 50 stocks in the Sensex index, notable losers were L&T, Infosys, TCS, Bharti Airtel, BL, HUL and SBI. Among the major gainers were Jindal Steel, Tata Power, Hero MotoCorp, Wipro, ONGC, Bajaj Auto and Maruti. Apart from GAR overhang, the sentiment was also hit by weakness in the global markets. Asian equity markets closed lower today due to growing concerns about the economic growth in China. Economic reports out of the US this week have also not been that great. At the same time, economists and market experts warn about continued troubles for the debt-strapped euro area nations. Asian equity benchmarks closed mostly lower as investors pared their holding of risky assets due to mounting concerns about the state of global economy. Commodity-linked shares were the worst performers in Asia as market participants turned risk-averse due to signs of slowdown in China, the world's biggest consumer of minerals. The MSCI Asia Pacific Index is headed for the first monthly drop since November. It lost approximately 1.5% so far this month and was down by 1.3% last week. European stock markets fell in choppy action on Thursday after economic sentiment for the Eurozone slipped unexpectedly. The Stoxx Europe 600 index was down by 0.7%. The FTSE 100 in the UK was down by 0.7%. The DAX in Germany was down by approximately 1% and the CAC 40 index in France was down by 0.8%. Thank you. Wish you have a great day ahead.